AECI services the mining and manufacturing sectors with chemicals and explosives and was formed by a merger of Kynoch and Cape-Ex in 1924. Its major facility is in Modderfontein in Johannesburg. It has a market cap of 9.8 billion rand, a price to earnings ratio of 13.6 and a dividend yield of 3.4%. Well, looking at that market cap, not as big as Sasol. What do you make of AECI right now?
Well, as you said there, it's one of South Africa's oldest companies, and it kind of grew up with the explosives being used in the mining industry. So they combined the one facility which was in Kimberley with another one which was in Mbogantwini and the one in Cape Town, and then they built that big complex at Modderfontein on the eastern side of Johannesburg. And that's fine. Look, they've had their ups and downs. One of the issues that one can add here is that they've got quite a substantial property portfolio, which they have spun off into a company called Heartland. And that entire Greenstone Mall sort of area was in fact land that was around the AECI facility in Modderfontein, which they decided they didn't need anymore because the modern manufacturing process for explosives is more efficient and there are less explosions. So then they didn't need all the land around. So yeah, but it's sort of bumbled along. The problem is that it sells its chemicals, like its old SA Nylon Spinners division, into the local manufacturing and textile industry, which basically died. So then they had to kind of shut down that business. So linked as it is to the local South African industry, it's had its ups and downs, but it's really a reasonable portfolio.
Looking at AECI, we know that they have a few operations on the African continent. What do you make of them right now? Is it a company, like Paul is saying, is bumbling along?
Unfortunately, yes. Their explosive business is majority focused on underground mining, and especially the platinum sector. That's their biggest portion of their portfolio, and we all know what's currently happening there. They already released a trading statement, I think earlier this week or last week, stating that the 6 months up until December this year is going to be down 20%. It's now only October. So you can see that they're really struggling at the moment. They are being severely affected by all of these strikes. So unfortunately, I just don't think things are working for them at the moment.
Yeah, these strikes are affecting the overall economy. Paul, when you're looking at the share price right now, would you be getting in? What would you be doing with AECI?
Well, it's tricky because they're at the bottom of a cycle. So, they're in Duco Paint, Crest Chemicals and so on. Those have all been a bit mixed. As Stefan says, trading update, which was not expected. Everybody expects industrial companies to be doing better now as the economy recovers. So that was a bit of a negative. The CEO, Graham Edwards, has indicated he'll be retiring at the end of the year. So now they've got a CEO search on the go. Those property assets, unfortunately, a couple of years ago, it was going gangbusters. Housing demand was expanding and they could basically release chunks of land and get enormous margins on it. Now that's gone quiet again. I don't know. I suppose it could be one of those to look at buying, keep a watch on it and see if it reaches a cheaper level. But I mean, in a world of choices, for me, it's a bit of a mixed story. Earnings a bit volatile over recent years. So for me, not hot at the moment.
And yourself?
No, unfortunately not hot. I just don't think that, as I say, they don't have the wind in their sails. Manufacturing sector in South Africa really struggling. The mining sector struggling. Their property portfolio, although it's valued at 2.5 billion and they only have it on the balance sheet for 600 million. So there is a bit of an underpin there. But as Paul said, I think a lot of people are actually pricing a lot more for the property in that
So
price.
there's no growth potential for this one, Paul?
Well, there could be in years to come. I guess that's the tricky thing is, figuring out. What I'd like to do if I was seriously considering an investment would be to look more closely at where their strengths are in terms of their explosives business, in terms of their chemicals business. Because as Stefan says, you've got to look and see, okay, so there's a platinum industry thing. The explosive business is very competitive worldwide. Sasol is in there as well. They're importers. The Spanish are big in that, the Chinese and so on. And as you can imagine, the Chinese manufacture explosives in facilities which are not up to global standards, but then they make the stuff available for purchase by the mining companies. What do you care if people got blown up while they're busy making it? So, it's a tough neighborhood. We'll have to see. But for the moment, I'm not sure what that catalyst is.
So two not hots on AECI.